Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So feel welcome to the session. There is quite a lot that we're expecting in the markets today, as well as tomorrow. And of course, we know that the most violent week will be next week. So apologies for that. So let's begin by focusing on the economic calendar and what happened earlier this morning. So we know that yesterday in the afternoon or evening hours, we saw a surprise interest rate hike from the Bank of Canada, where they decided to go for a 25 basis point hike, despite saying that they had ended the rate hiking cycle. So everyone was expecting that the top of the interest rates in Canada was 4.5%, but then this was moved a notch higher to 4.75%. So it was the same surprise earlier in the week from the Reserve Bank of Australia, where we expected them to hold rates steady at 3.85%, but instead they went for a 25 basis point hike on Tuesday. So this surprise is now changing sentiments, especially concerning next week, where we'll be looking at the FOMC statement, economic projections, and of course, the federal funds rate. So the US interest rates currently stand at a limit of 5.25%. And now investors are becoming more concerned that the Fed will go for another rate hike, and these would push interest rates to 5.5%. So that's the overall sentiment in the market today, and it's driving out of momentum in the markets, especially for the US dollar, as well as US equity indices. So besides this, this morning, we had a flurry of information coming from Japan. This was majorly economic data, and it was pretty interesting to see all of them come in very positively. So besides the manufacturing sales in New Zealand, quarter over quarter, which were down negative 2.8%, and of course the REITs house price balance in the UK, negative 30%, we have seen some good performance coming from the Japanese economy. So the first data point was bank lending, which improved by 3.4% year over year, compared to the reading previous month, which was 3.2%. So this was a good improvement. Then the current account was a huge surprise, where the trade balance basically almost doubled from the previous reading. So in the last reading, it was 1.01 trillion, but then here we have 1.9 trillion, which clearly beat the expectation of 1.39 trillion. Then we have the final GDP price index year over year. This was steady at 2.0%. But then the final GDP quarter over quarter is the performance of the Japanese economy between January and March this year. It was up 0.7% compared to an expectation of 0.5% and a previous reading of the previous quarter, which was 0.4%. So this was good news in the markets. And as a result, apologies. I just realized I wasn't sharing that. So let me just share that again. So this is Japan, the news that came in early this morning. So bank lending improved from 3.2% to 3.4%. Current account almost doubled from 1.01 trillion, the previous reading, to 1.90 trillion. Then final GDP price index remained steady, whereas the final GDP quarter over quarter, that is the growth of the Japanese economy, was 0.7% in the first quarter of this year. And in the last quarter of last year, it was 0.4%. So investors expected a slight growth to 0.5, but getting 0.7 was a big surprise. And as a result of these, we saw a very strong Japanese yen in early morning trading. So from what we had analyzed yesterday in the USD JPY currency pair, it's a market that is currently consolidating and trading inside of a triangle. So yesterday during the session, we were expecting that the market would rally all the way up to towards the upper trend line. So there was some volatility, which led to some form of a liquidity grab here. And then the market went all the way as projected to this particular resistance. Then early this morning, after we got the Japanese news, we saw momentum now moving back downwards. And now it makes more sense to think of this as a cycle that is potentially going back towards the lower trend line. So for USD CAD, we had mentioned that it was currently consolidating. So yesterday in the evening, after the Bank of Canada surprised everyone with a rate hike, there was a big spike, which was followed by a pullback. The market retested this particular trend line. And since then, there has been consistent pressure where the Canadian dollar keeps on strengthening against the US dollar. So as for Euro USD, this is what we were seeing, a market that was currently in the formation of what looks like a triangle. Before it broke towards the upper side, made quite a good run before pulling back downwards. And now we have a very familiar pattern. So if I was to clear my chart and try to understand the price action of the last 3 days, then you can all observe that the market is currently consolidating. So on one hand, if you look at the highs, let's say this was sorry. So Tuesday and Wednesday, we have highs that are currently getting higher. But then if you compare Monday, Tuesday, Wednesday, we have lows that are getting lower. So the market is still currently under consolidation. So whenever you're drawing these trend lines, we are trying to understand the overall price direction. So it seems like the average price movement is just sideways. So we might be have to be patient and wait for the market to get to an extreme level so that we can identify trading opportunities. As long as markets are moving sideways, then opportunities tend to get smaller and smaller or dimmer. So for pound USD, we had our triangle here yesterday. So from the 15 minutes chart, this is how it was looking like. Market swinging up, down, up, down, up. So we got our expected break. The market made quite a nice rally, pulled back downwards, and now seems to be continuing. So today's target remains at the same level, which is basically yesterday's high. So there is a good chance we'll be seeing the pound USD rally to yesterday's high. So this is in the books, especially if we continue seeing some weakness in the dollar. So the other key thing that we need to understand is that for the dollar index, we are seeing a pattern emerging. So from the beginning of the week, that is on Monday, we started here, market went up and then back downwards. Tuesday goes down and then up and then down. Wednesday, up, down, up, and today seems to be going downwards. So clearly, from this kind of price action, we can't say that per se, the dollar index is going upwards or downwards. So what we are seeing here is a market that is basically moving sideways. So if you are to do an average momentum for price action this week, it would be somewhere along these lines. So I would say the average movement of these prices are sideways. And with that information, then we know that the dollar is just consolidating, awaiting for news from next week. So remember, next week is when you have US CPI or inflation data, and inflation data will be very influential in what the Fed decides. So the markets are currently or eagerly waiting to see the CPI, and of course, the FOMC meeting minutes, and on top of that, the interest rate decision. So for now, it remains a sideways momentum market. And whenever you see these, of course, the extreme prices make more sense. So for gold, which is something that we've been tracking consistently, we know that the 1964 price level was very important for us. It was holding on quite well. The market was unable to break that level for quite a period of time. So there was a number of candlesticks that attempted to break that area, all of them failing. So this, if you count from here for the 2 days, it was at least 14 candlesticks. Then yesterday in the afternoon, there was a big spike upwards followed by a reversal immediately, indicating that that level had been rejected, which means that our entry point would have been here targeting all the way down to around 1938. So this happened so quickly and the market made quite a strong drop. And now we are looking at a mixed reactions market, and gold is seemingly finding a very nice bottom here. And since morning has been making quite an impressive comeback. So from here, it's very important to understand that the bottom was a very familiar candlestick pattern. So this is what we normally describe as a morning star. So the market is initially going downwards. First candlestick is red. Second one has a small body. The second one is green with a strong momentum, indicating a strong entry of buyers. And since then, we have been seeing gold make an impressive recovery here. So there is a good chance we'll be seeing some further upside in gold, making a recovery from yesterday's drop. So looking for opportunities in this particular chart might be in order. So we can also not discount the fact that the market could retest this area here, but chances are likely that gold will be making another run for the 1964 price level. So for US equity indices, in this case, I'm looking at the S&P 500. We had to readjust the flag, and now you can see the swings happening in the flag. So we just bounced from the lower side of the flag. So perhaps today we will be bullish, and we could be seeing the S&P 500 move towards the upper trend line and retest this upper trend line within the flag. So it's a consolidation week. So it's the same thing happening with the US 30. But for this one, it seems like we broke out of this formation, and today we are attempting to push higher. So in this case, looking at the last week's high might be in order. So this could be a nice target for intraday trading. So for Brentwell, this is what we are seeing, a market that was trading inside of a triangle. So after breaking outside of this triangle, we have seen some good momentum upwards, followed by a pullback, and now the market is attempting to push even higher. So a nice target would be a previous high. So we have seen that there's a lot of resistance around this area. So there's quite a number of times that the market has found resistance here and here and here and here and here, and all of them don't seem to be obeying some form of law. However, if you are to look at the support side and you look at the trend line that was extending very nicely here, then you'd have an idea of what we are looking at. So use a higher time frame, in this case a 4-hour chart. I'll zoom, and then I'll add another trend line towards the upper side. And now you can see what is clearly happening in this chart here. So it's a market that was trading inside of this rising wedge, broke towards the lower side, went back upwards, and now it seems like it's getting back to the previous high. So if I was to remove all these and we are left with this pattern here, then it will make more sense to understand that the market is currently retesting a major resistance level. So I zoom here, you can see the market going back to the pattern and then dropping back downwards and then moving even up higher. And now we are retesting the same level again. So from a smaller time frame, I would say that the very short-term target is yesterday's high. And of course, if we manage to breach this, then last week's high could be in sight. So two key short-term targets seem to be 77.5 and 78.589. So on the lower side, it's very clear that this is a key level trend line that the market has been obeying. So any break below this trend line could be taken as a short selling opportunity. But if the market was to retest this area here, then a play along the same lines would also be observed. The market going for another run upwards after retesting this area here. So this could also be in the books. So you have to be ready if this was to happen. And of course, if there's a break, then it could be going back down to an area of around $74 per barrel of oil. So that's it for today. If there's any questions, I would like to see them now. So there's also a very interesting article on Reuters today. So I'd like to share this with you. So it's a morning bid article, just taking a quick look at the market updates. So I think the most interesting thing is the focus on US interest rates. So broader consensus is that the Fed will do at least one more rate hike. The question is whether it comes next week or in July. So the CME FedWatch tool showed that probability of the Fed hiking interest rates by 25 basis points next week is 36%, and this was 22% a day earlier. So investors are more confident that the Fed will go for a rate hike, especially considering that the two central banks surprised the markets with a rate hike. That is Reserve Bank of Australia and, of course, the Bank of Canada. So for economists, they are basically voting that the US will hold interest rates, 78 out of 86 economists. And, of course, there's considerations of the oncoming CPI data. So the current state of events is that inflation in the US peaked at 9.1% in July and has been going down ever since, currently at 4.9%. Core inflation has also seemingly peaked and is now moving upwards. And of course, the Fed funds interest rates, currently at 5.25%, seems to be overtaking inflation, which is considered as a restrictive territory. So the next meeting, which will be on 14th next week, will be very important for any trader to understand the ongoing monetary policy in the US. So there's a question about US oil. Since card rates moved higher, of course, there's that correlation. So we know that whenever the Canadian dollar is strengthening, then we also tend to see the price of oil strengthening. So yes, that's a positive correlation. Should we expect a strong JPY today against other currencies? Definitely, that the series of strong Japanese yen news seems to have strengthened the Japanese yen. So I expect that kind of trend to continue. So how do you add the dotted lines on your chart? Control plus Y. What did the governor say? Which governor? Should we expect gold to rise? Definitely. Japan, I think I've commented on that. And a request to check on Euro Pound. So last part of the presentation will be, of course, focus on the economic calendar today. So the most important news for the day to watch out for are three things. So first things first, it will be European revised GDP. This will be happening exactly at midday. So we expect that European GDP over the first quarter of this year was 0.0%. So any drop below that would be very surprising to the markets, and it could cause some strong volatility. So this is a key data to watch, and it could cause volatility in European indices as well as Euro pairs. Then a speech from Swiss National Bank Chairman Joel Dunn. This will be happening at 3 or 5 p.m. So this has the potential to move the markets. And of course, US unemployment claims, which previously read 232K, and now we're expecting 236K. So this has the potential to cause volatility in the markets. And of course, tomorrow early in the morning, we'll be looking at Chinese CPI, which is consumer price index, as well as producer price index, which is basically a measure of inflation in China before we focus on Canadian jobs data. So that's it for today.